We're talking to the management of Kirloskar oil engines. They're one of India's leading genset sort of manufacturers. Numbers have been looking up, and the segments that they operate in, which is largely agriculture, that has also been doing very, very well. So demand seems to be robust, and the runway for growth seems to be pretty healthy as well. Rahul Sahai is CEO at Kirloskar Oil Engines. He's joining us right now to take some questions. Rahul, good morning. Great to have you with us here. Appreciate your time on CNBC-TV18. So numbers have been looking good, Rahul, and markets have taken note, obviously. But I just wanted to get a sense from you on a slightly broader basis. What should we expect? Some of earlier complained that this perhaps is a bit of a cyclical kind of an industry. Are we in for at least a couple of quarters of a strong growth here? What are the big triggers we should watch out for? And what is the outlook for the business?
Right. First of all, thank you for having me here, Prashant. I think it's an honor. So to answer your question, the way I would look at it is last year, we as a leadership team released a guidance where we said that we will grow by 2 times over the next 3 years. And this is taking into cognizance the kind of CapEx cycle that we are seeing, and also the kind of focused initiatives that we are driving to ride those CapEx cycles. So if I look at the order board we currently have, we have a very significant order board, both on our power generation business, as well as if you look at our industrial business and the international side. So just from a demand standpoint, the demand seems very robust. Some of the key segments that are driving that are all the infrastructure initiatives that the government is taking. There is a lot of focus on data centers, so there's a lot of demand coming in from some of these segments. So I think all in all, we're seeing robust demand, along with I think what is definitely helping is the CapEx cycle, and that's a strong tailwind in this entire process.
So you said that there is demand coming in from many verticals. The government is also pushing a lot of segments, including data centers, which is big now. So can you tell us, you're diversifying and getting into many new focus areas as well, whether it's the water management segment, bio-waste management, firefighting, pumps, etc. What could the revenue mix be 1 to 2 years down the line? Where do you see the maximum contribution coming from and maximum growth as well?
Right. So if you look at our businesses overall, as an intention and a clear strategy, we are trying to grow our international business. Now, some of these products are being launched because we clearly see a need for these products in the market, and we are positioned well to execute and drive growth through these products. But from an international standpoint, as we've communicated in our 2X 3Y strategy, that's the key focus area for us, and we are looking to grow to close about 30% contribution over the next few years, so as part of our growth plan.
So currently your export contribution is 12%, right? Of the total revenues. So you're planning to grow that from 12% to 30% over the next 2 years, you said?
That's right.
Okay, and what would this mean in terms of your operational performance? Because of higher exports, can you scale up your margins as well? And if yes, what would that range be?
So exports typically so they are margin accretive. They're definitely, they support the entire margin profile of the organization. And if I look at, so I won't give a specific guidance on the margin, but what I can say is it'll definitely be better than where we are positioned today.
Okay, all right. Hi, Rahul. Good morning and good to speak to you. Nigel on this side. Just focusing on margins, though, give us a directional view. I'm looking at your B2B and your B2C segment. Now, the bullish people on Kirloskar Oil's engines, they argue that maybe you should get a better multiple because the nearest competitor is Cummins. But for that, the margins have to improve, and they have improved. What is the trajectory on the margin front on the B2B segment, point number 1? And point number 2, on the B2C, that's far smaller, but margins are at mid-single digits. Is there a scope that you take that to double digits at some point of time? So margin trajectory on both B2B and B2C.
Right. So if you look at what B2B business is, it's largely our power generation and engines business. That's the business I also drive. My colleague Asim looks after the B2C business. But if you look at the margin profile, there is a clear focus from both of us to ensure that we are growing the margins. Now, at a B2B level, we typically operate about 14% EBITDA, and because of the international growth, we are also looking to grow that. There are opportunities with new product launches as well as growing the aftermarket business. So there is a significant opportunity there. On the B2C side, we are again looking at growing the margins, and I'm sure Aseem and the organization will come close to double-digit EBITDA in due time.
Okay, all right. Rahul, just one more question. You know, ARCA FinCap, you'll have pumped in, I guess, close to around 1,000 crores out there. But in the past, you'll have hinted there could be some kind of value unlocking that will come about. Could you tell us what is the plan out there? Maybe a demerger, maybe listing this entity separately. Is there something like that on the cards? Because 1,000 crores has gone in. I believe that you're not going to put more money, right?
I think at this point, it may not be appropriate for me to comment on that, but we're definitely looking at all options.
Okay, looking at more options. Just one final question before we let you go. You said that you're looking to take the export contribution from 12% to 30% in 2 years, 2 to 3 years. What is the market share currently in the power gen business? I think it's a little over 30% if I'm not wrong. The market share, how much can you grow it by over the next 1 to 2 years?
Right. So if you look at our power generation business, we have close to about a third of the market. So by volume, we're the largest player in the country. What we are looking to do is enter spaces that we've not historically been dominant or significant in, especially on the high horsepower side. So there is a clear focus on driving growth through our MHP and high horsepower range over the next few years. So I think from a market share standpoint, we definitely gain overall.
I'll just quickly, with regard to their NBFC, all options are on the table. But by when will we hear about one of those options? When will you all decide in this fiscal year?
I don't think it will be appropriate for me to comment on that. I think we'll wait for the announcements to come.
Okay, then
but Rahul, you'll spin it off, right? I mean, that it makes sense.
Yeah, so like I said, we'll kind of evaluate that, whether spinning it off makes sense or what needs to be done and what is the timing. I think the timing becomes more critical.
But the direction is such that you'll look to unlock value. Either it's listing it separately, demerging it, something like that, right?
Yeah, I don't think I can comment on that specifically.
All right, Rahul. Okay, all right, Rahul, maybe the next time we chat, we'll have further clarity. But clearly, you're sounding very optimistic on business, and margin improvement in both your segments is what you're focusing on. It's a good chat. Thanks so much for stopping by this morning and speaking to us here on CNBC-TV18.